Hello everyone, I'm Mr. Compound. Many friends leave messages in the background asking themselves if they want to compare the two of SPY and VOO in the regular market. Which one is more suitable for them? Today's video will give you a good analysis of these two ETFs. If you are discovering this channel for the first time and also like to study stock investment, please subscribe to our channel and be the first to see our videos. A weekly program that explains hardcore dry goods in simple language. Without further ado, let's get started. To buy an ETF, let's first get to know one of the main characters of SPY and VOO. SPY is the first ETF in history, which was paid to the world by a veteran fund company in the United States. Launched in 1993, here is a little knowledge for you. Sometimes we may hear someone say that they buy SP2, which is actually a proxy for SPY, because the abbreviation of SP2 fund itself is pronounced very much like the pronunciation of English spider silk, so sometimes many veteran investors also like to write it as. Compared to Big Brother SPY, our other protagonist VOO is much younger, and he was launched by Vanguard Fund in 2010. Founded by Jack Berg, Starlight Fund is the second largest ETF issuer in the United States, and its biggest feature is the development of low-cost index funds in Chile. Warren Buffett, who we are familiar with, admires Berg and his Vanguard funds very much because he believes that for most people, investing in low-cost index funds is the best investment base. At the time of Berg's death in 2019, Warren Buffett also called Berg the person who made the most contributions to personal investment in American history. There's a lot to be said about Berg, especially his consideration of cost. We will dedicate a video to his investment philosophy. Charlie read his book on his own, which gave me a new understanding of investing. To get back to business, STY and VOO are similar competitors from different publishers, and they both track the S&P 500 index. So their holdings and percentage of holdings are almost identical. Let's take a look at the top 10 holdings of SDY Apple, Microsoft, Amazon, Facebook, Tesla, Google, CBOC, Zhaosheng, and JP Morgan Chase, while the top 10 VOO are similar to SPY, except that there is less Tesla and one more Visa. These two ETFs are allocated by grade, which is 3,692 yuan, and the dividend yield is also about 2%. Floating SDY and VOO plus L15 issued IVVs account for 80% of the world's ETF issuance. Therefore, for investors who want to easily and quickly hold shares of SP's 500 large companies, SPY and VOO are good choices. But friends who have done market research must also know that there is still a difference between them. The main difference between the two ETFs is the management fee and liquidity. Because the ETF itself is still a fund, there will naturally be management fees. The ETF's management fee is directly reflected in the share price and requires us to pay extra. But for us investors, we definitely still hope that the management fee is as low as possible. The VOO expense ratio is 0.03%, which is almost 0.06% less than the management fee of SPY, which is 0.09%. Don't underestimate this 0.06%. If we hold it for a long time, plus the effect of compound interest, the difference may be quite a lot. For example, from 2010, when VOO was listed, to 2020, when we held it for 10 years, SPY increased by 234.1%, and VOO by 236.5% 10 years ago, which is a full 2.4% difference when the targets are all S&P 500. And as we hold for longer, the gap in returns will get bigger and bigger. So from the point of view of management fees, VOO seeps, but from the point of view of fund size and US-Japan trading volume, SPY is in the lead. It has a scale of almost $400 billion and a daily trading volume of about 50 million. While VOO only has a scale of 250 billion US dollars and a much smaller trading volume, with a daily trading volume of about 3 million. SPY has a large trading volume and the highest liquidity, which is simply better to trade in the market. For those who trade frequently in the short term, the advantage of this is that the range of bid-ask is relatively small. Bid-ask spread is the difference between the price offered by the buyer and the seller when a stock is traded. The closer this number is to when we were making a trade, the more likely it is that it will be filled at the price we see. Viewers who see this may be confused. Why is the management fee of VOO lower, but more people buy SPY? The main reason is that SPY was established early. After all, it is the first ETF in history, and it is the originator of the same type of ETF, which naturally occupies a certain scale of investors. It is precisely because of the early establishment of SPY that the scale of operation and the high operating cost will make it difficult to reduce the management fee. In order to catch up with Big Brother, the management fee was charged very low to attract more investors. In fact, attracted by VOO's reduced management fees, more and more investors do transfer their funds from SPY to VOO every year. According to Bloomberg, since 2020, SPY has outflowed $33 billion, the highest outflow in the industry. At the time of the SPY outflow, VOO had an inflow of $23 billion, the industry's highest inflow of new owners. So now it looks like the low management fee fund of the Fresh Frontier Fund is unstoppable. Regulate the scale and catch up with the Big Brother. So, SPY or VOO, which ETF will be more suitable for you? The key to making the right choice between the two ETFs depends mainly on how often you trade. So without having to think about other factors, if it is common sense, then it would be better to recommend VOO because the management fee is relatively low. If it is a frequent trade, then it would be better to recommend SPY because the liquidity is better. In other words, VOO is more suitable for common investors because of its lower holding costs, while SPY is suitable for short-term investors because of its lower trading costs. Therefore, you can take your seats according to the specific situation of Mr. Compound's analysis. In fact, through comparison, we will find that whether you choose SPY or VOO, it is a very good choice in the long run. And the difference between the two is not big, and the real need to carefully analyze and compare more may be the comparison between VOO, VTI, and QQQ. Therefore, in the next video, the tea ceremony per share will compare the short-term and long-term pros and cons of these three, and please don't miss it. Based on the feedback from the audience, Mr. Compound found that many viewers were interested in ETF investment. Mr. Compound believes that this is a very reasonable phenomenon because ETFs, as a tool in the financial world, not only have many functions, but also do have a lot of doorways and skills. We all hope that this tool can be used correctly and reasonably, so that we can achieve twice the result with half the effort in our investment. Therefore, Mr. Compound of US Stocks is going to make an ETF-related video series for everyone, focusing on analysis. The various ETFs that are common in US stocks, and how can we, as retail investors, correctly allocate various ETFs, and what strategies should we use in different market conditions. If you are interested, please subscribe to our channel so that you can be the first to see new videos. That's all for today's video. If you think it's rewarding for you, don't look at the money. Please help like it first. And you can also share this interesting knowledge with your family and friends. I'm Mr. Compound of US Stocks, and I use simple language to talk about hardcore dry goods. Make the background music inspiring and happy.